Well, good evening, everybody, and welcome back to Strongman Personal Finance. Today is the Investor Stock Picker Stock Market Super Bowl. We just had the FOMC announce a rate cut, and the stock market really didn't move that much because, shocker, it was already priced in. So let's go cover what the Fed said in their most recent meeting today, the little statement they put out. We're going to go look at the stock market. We're going to go check out the 30-year mortgage. We're going to look at Treasury yields. We're going to look at future rate expectations. And finally, we're going to address how this impacts me, Christopher Bell, because this is my YouTube channel and I can talk about whatever I want. So let's dive right into the news. So the Federal Reserve had their monthly meeting and they released a statement. Federal Reserve issues FOMC statement September 17th, 2025 at 2 p.m. Everybody was just sitting rubbing their hands. Oh my God, the rate cuts. Screwed off at work, not paying attention. The only thing that matters is what the central bank does with short-term rates. So what does the Fed have to say? Recent indicators suggest that growth of economic activity moderated in the first half of the year. Oh, did it? You mean all those massive job revisions and potentially the tariffs and AI, my hot guy? Job gains have slowed and the unemployment rate has edged up but remains low. Inflation has moved up and remains somewhat elevated. Well, that's really interesting. So we have inflation moving up and we have employment moving up. Now, I could be wrong about my history. I'm being honest here. But back in the 70s or 80s, we had stagflation where you had high unemployment and you had very high inflation. And what the Fed did was massively raise interest rates in order to combat that. So we're starting to see a massive uptick in unemployment, and we're having all these revisions, which means all the past data was totally freaking incorrect. The sampling method they used was flawed. And now we have inflation moving back up. Okay, it's not going crazy yet, but it's starting to tick back up. It's hovering about 2.93%. Okay, and maybe that'll be revised too. Who freaking knows? So in response to that, we're going to cut rates. Okay. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. Oh, great. So we just had massive inflation in 2021 and it's kind of come down and it's kind of stopped coming down. It's kind of stabilized at about 3%, starting to tick up a little bit, and we should cut rates. Got it. Long run, 2%. Makes sense. Uncertainty about the economic outlooks remains elevated. The committee is attentive to the risks to both sides of its dual mandate and judges that downside risks to employment have risen. They've already been risen. All the clowns that were complaining about the job market being horrible, they were actually right. Okay. Now, I can't tell that for myself. I've been at one job for 2.5 years plus. So I'm not really in tune with the job market. The only thing I'll say is I used to get all these phone calls from these Indian recruiters. Phone call, job, take this job. Hello, sir, take this job. And a month or two ago, maybe 3 months ago, they stopped. I stopped getting these phone calls. I used to have my inbox on LinkedIn absolutely flooded with recruiters, bro. And now I'm not really getting that much. It's kind of weird. What's going on here? Should I quit my job? I don't know. In support of its goals and in light of the shift in the balance of risks, the committee decided to lower the target range for the federal funds rate by 0.25%. Oh my God, this changes everything. To 4 to 4.25%. So before, the target range for the federal funds rate was 4.25 to 4.5. They cut it by 0.25%. I mean, do you expect stocks to rocket to the moon? I mean, this was pretty expected, okay? Nothing really changed. What would have been unexpected is if they had cut by 50 basis points. But even looking at the betting market, the CME group tool, which we'll look at in a second, even that was saying that the most likely probability was a 25 basis point cut, which is, in my opinion, really not that much of a difference. In considering additional adjustments to the target rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. Yeah, by cutting rates. I'm sure that's going to work. All right. So basically not much. Now, I think they implied that they could potentially cut rates 2 more times. So let's go look at how the stock market did. So VT, which is the true and only stock market, the true index, excuse me, there's many stock markets, was down 0.15% today. Look at the price action today. Kind of flat, waiting for the meeting. Rockets up. It almost touched 138. Daddy was feeling very rich for a second, okay? And then it sold off, and then it stabilized. But throughout the day, it basically just stayed flat, completely priced in, okay? There was a small likelihood that they could have cut 50 basis points, so maybe that's why the market sold off a little bit, okay, because that didn't come to fruition. And then after hours, apparently it's up 0.39%, okay? So we could be flirting with 138 again. Wow, what a momentous day. Now, how this really matters to you is auto loan financing and mortgages, okay? Most people are locked out of the mortgage market, and I personally would probably be able to buy a house now with the same money I had back then, but my payment would be a lot higher. As a matter of fact, I might have put a down payment, okay? And my recommendation to you, I didn't do a down payment for this house, VA loan, because I'm a hero. If you're going to buy a home now, if you're ready, if you know you can afford it, and you have a down payment, and you think you're going to stay there for a long time, and you don't worry about home price fluctuations, go ahead and buy, okay? But if you're just going to be like, oh, I might move in 2 or 3 years, you might not want to do that, okay? You might not want to do that. It's not a good idea to buy a home if you're only going to be there for a couple of years. Homes are very expensive, and they have high transaction costs. It's not like buying a stock. You pay large commissions to buy and sell homes. So I would not do that. But the only good news is that you can see mortgage rates coming down. So the highest 30-year mortgage rate in America was 7.04% January 16th, 2025. And since then, because the 10-year has kind of gone down a little bit, mortgage rates as of September 11th are sitting at about 6.35%. So it's measurably more affordable to purchase a home. When interest rates go up, oh yeah, even a couple percentage points can massively add to your payment. So this is a kind of a good thing if you're ready to buy a home, okay? Now, when it comes to yields, I mean, these are the Treasury yields for different maturities for Treasuries. And you can see that the 3-month is sitting at 3.97%. Okay, that's less than the federal funds rate target. And then you see 6-year at 3.8, 12-month at 3.6, 2-year at 3.55. So you could buy a short-term Treasury now and get 3.97, but you get a lower rate if you buy a 2-year. Why is that? Well, you can lock in 3.55% instead of taking the risk of buying a 3-month only to see the rate drop even more. So the market's definitely pricing in rate cuts, okay? And then you can see the 10-year is at 4.09. Now, like I said, if you want to buy a house, you might want to pay attention to this. This is what really is important. I mean, it makes more sense to me to go off the 30-year, but I guess the 10-year is the benchmark for homes. So you can see yields have come down. And look at that. Oh, my God. The 3-month is down 25 basis points. And the 6-month is down 25 basis points. Crazy. Short-term is down 25 basis points. Almost like the market's very efficient. Crazy. Okay. So overall yields are coming down. So financing costs are coming down. And potentially the money supply could go up because as there's lower rates, their banks create more loans, theoretically, which increases the money supply. It's mostly banks creating money through loans. Fractional reserve banking, bro. Now, what about the future? Well, this thing is pretty interesting. CMEgroup.com/market/blah, blah, 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 blah. And they kind of give you an estimate of where rates are going to be. So the next FOMC meeting is 41 days away. Oh, count down. Everybody count down. Oh, my God. And what the market's basically pricing in, according to this tool, and I honestly can't attest to the reliability of it, but they got it right, at least with the last one, is there's an 87%, almost 88% probability that rates will come down another 25 basis points. And there's a 12% probability that rates will stay the same. Okay. If we look out in December, there's a 79% probability that rates will be between 350 to 375 basis points and a 19% of 375 to 400. And if you go out to 6 December 2026, look at these probabilities. Okay. It's a lot more ambiguous, but there's a remote chance that rates could be a 0.1% chance that the Fed's fund rate could be between 175 to 200 basis points. So it's kind of an interesting thing to look at. It's just like kind of what the market's pricing in, and it kind of moves everywhere. But the key thing to take from this, if you're an American, is potentially impacts on mortgage. You got to watch the 10-year, though, because sometimes short-term yields and long-term yields diverge. Okay, so pay attention to the 10-year, and that'll directly affect your mortgage rates. And, of course, if you're in short-term treasuries or savings accounts, you're going to see your interest go down, okay? So this is VUSXX. This is what I have $60,000 in. Well, to be precise, 59,900 and something, okay? I'm a liar. I don't have exactly 60,000. But you can see the most recent distribution yield was 4.25%. I have a suspicion that's going to come down, okay? So yields in your money markets are going to come down, and probably yields on your savings accounts are going to come down as well, okay? That's really the big thing, but it's kind of immaterial. I mean, 4.24 down to 4. Oh, my God. And then in 40 days, it might go down a little bit more. I think most of this is priced in, okay? The only time you're going to see a big market move is if something massively unexpected happens. I mean, the market is has a pretty effective pricing mechanism overall, I think, okay? So, yeah, it looks like by the end of the year, there's a good chance that rates will be down, from now, 50 more basis points? Okay, cool. So you take that what you will. Me personally, I'm not changing my investment strategy. I want my 60K of treasuries as basically a money market as a backup in case I need to live off my savings and not have to worry about market fluctuations. I'm not buying it because of the yield. Okay, I don't know how many times I have to freaking explain this to you pinheads. But that's the decision today. Very shocking and amazing. Okay, all right, let's do some member comments, and we got 2 more videos to do. 660 puts loaded after rate cuts announced. Did you get your puts as well? Why are you buying puts, bro? Why are you gambling? Puts expire worthless. Amit and his 100K followers are claiming they are up over 100% year to date. I'm up 1,000% year to date. And Strongman thinks we haven't topped. I don't know when we're going to top. Stop trying to guess when we're going to top. Amit Kia, be a genius investor, the Indian Buffett. Never bet against a Miku Krija. Ryu, Pay Pigs. What's up, Wesley? How you doing? Only the Pay Pigs will survive the financial apocalypse. Yes, exactly. The more money you pay me, the more likely you are to survive. Right? That makes sense. At least to me. At least I'll be able to survive. So keep paying me every single month. Give me money. Give me so much money. Oh, I should create a new tier. A new tier of double Pay Pigs. Turbo Pay Pigs. milk mommies, milk daddies. I don't know what to call the higher tier, but no, we'll keep the 1 tier for now. The Fed's forecast of 225 basis points in 2026, 1 in 27, and 1 in 28 will cement the name too late pal in history. Unfortunately, Trump will be right again about Jerome. I mean, that remains to be seen. We don't know. Corrupt Fed has no idea what they're doing. Clowns. They said 2 years ago they were going to fix the issues. Now they're saying the same thing. Well, they did bring down inflation. I think they were successful. It's not all the way down, but inflation was raging. They jacked up rates, and the inflation rate dropped pretty precipitously. I think they did a good job overall. They're just being cautious. Oh, bro, cut rates so my stocks can vertical line, bro. Let's hope inflation doesn't go up. Clowns are lowering rates at the top of the market. Huge clowns. I mean, don't worry about it. If you're a long-term investor, it doesn't matter, bro. Amit is up 145% year to date. It's not a top. He's a genius. Palantir's the future. Why would you buy an index? You could be up 145%, bro. What could go wrong? It's so over. Good thing VT is my benchmark. I can't lose. It better be your benchmark, boy. It's everybody's benchmark, whether they like it or not. I wonder how long it will take for money markets VUXXX to, I would say very quickly, because they're trading in very short term. They're buying very short term government debt. What's the average maturity? So the average maturity of their holdings is 39 days. So it's going to roll over very quickly. It's going to drop within a month easily. I would not be surprised. But that's not the point. The only reason you should have money in there is for stability or for short-term goal. If you need money for something in the short term, put it in the money market. If you don't need the money for 30 freaking years, just put it in the stock market. Doesn't matter if we're in a bubble or not, because we don't know. Just buy and hold. If I start getting under 4% of my cash, I'm going to put it into the stock market. Sub-4s. Well, I mean, it depends on what you have the cash for. Will you join my RuneScape? I need to stay away from RuneScape. Especially next year. I can't be distracted by games. Maybe, I'll think about it. 30-year fixed rate on mortgages went up slightly with the weak forecast as bonds went up. 30-year fixed went from 6.13 to 6.1. I mean, it's so immaterial. You might as well just buy. If you're ready to buy a freaking house. Just don't move. Buy your forever home once and stay in it. Stop moving, people. I demand PayPig merch, PayPig mugs. Well, the last time I had merch, somebody freaking complained, and then the company was like screwing people over. So I don't trust those companies anymore. You can thank Alan Carlson for that. He whines endlessly because I scammed him. I basically did an FTX. He bought like a coffee mug and he never got it or something. A lot of clowns think the Fed will cut rates. Mortgage rates are going to drop instantly. Yeah, that's not true at all. Take my money, bro. That's right. Give me money. I don't think today was a great day for a house hack. Look, he's got an AI software now, bro. Of course he won't, because you're stuck now. H93, did you get puts? Where else can you go once the market is at an all-time high? Depends what your time horizon is there. Good guy. You buying that silly Treasury ETF is like a vegan eating fruit, fake meat. Buy the dividend stock. Yeah, I'm going to buy dividend stocks that could drop 50%. They don't drop 50%. Yeah, they can. It's possible. Watch. I quit my job. My YouTube channel gets deleted. The stock market drops 50%. Then I got to sell stocks at a 50% down market. It's total disaster. That could happen. You know what prevents that? Treasuries. I have different short. He's shorting Tesla, Palantir, QQQ. Palantir needs to come down huge. It's the future, bro. Buttes are pumping. Let's see if my 660 put's expiring Friday. Why are you buying puts for Friday, dude? It says VT's up 0.34% in the aftermarket. How much is QQQ up? 0.25%. Oh, International wins again. International's been cooking this year, baby. Oh, God. Cooking. Oh, I get 1 year and I'm going to enjoy it. Clown pump market. He'll be too late because he admitted jobs under his break-even rate. Bearish jobs, but a slower than expected dot plot. The two don't. I mean, with all the revisions, it's like madness. Like the worst revisions it looks like we've seen in decades. VT returns are so easy to beat that it's a joke. It's easy, bro. It's so easy. Just buy U.S. large cap tech, bro. Palantir. Everything beats VT. Literally everything other than treasuries. I don't use options. Virginscape. I only sell covered calls, and of course you do. H93. Do you think Amit is a solid investor? No, he's a clown. I feel bad for whoever became a member for member-only videos. Yep. Well, you know what? Either you get a bunch of live streams or you get member-only videos. You choose. He has contacts like Dan Ives and Kathy Woods. What does that tell you about Dan Ives and Kathy Woods? He knows them, one. He knows them, bro. Best one I heard. You made my day. God save him. Spy about to hit 661. Absolutely ridiculous. 666. We got the Copers here. Oh, International sucks, bro. Yeah, look at the past performance, bro. Oh, I made more money than you this year. And you know what I did? Nothing. I just bought an ETF and held it. I haven't done anything, dude. Okay, what's VT up this year? I literally did nothing. I sat on my butt and I got 16.75% capital appreciation and probably another percentage in dividends. I just sat here and did nothing. I didn't do anything. And I'm up 16.72%. Probably 17.5 or more. Oh, indexing is stupid, bro. Yeah. All right, we got to move on to the next video. Okay, paper gains. Well, I think of it as I'm buying more of the means of production. I'm scared. Thinking people will sell at the bottom. Yeah, I'll sell at the bottom. That's right. I'll sell VT. I will totally sell VT. Trust me, bro. When everybody else was panicking in that little bear market, you know what I did? Nothing. I didn't care. VT was at like 70 something. Didn't care. Didn't care. Doesn't matter, bro. All right. Anyway, like, subscribe. Consider joining as a member for me to answer your comments, and also consider booking a free 30-minute tax consultation. I am a certified public accountant. I can do your business and or personal taxes any state in the United States. You can book a free 30-minute consultation with me. See the pinned comment at the conclusion of this video. You can talk to me for free. I'll give you an upfront quote for your tax preparation, and stand by for the next video. Cheers!